Welcome to another accounting video. I'm your host, Professor Capco. In today's video, we're going to discuss whether or not debits and credits increase or decrease the amount of money in a particular account. If you recall last video, we talked about the differences between debits and credits, essentially left and right. But today we're going to talk about whether it increases an account or decreases an account. And the answer to that is it depends. It depends on what type of account it is. As we've already discussed, there's assets and liabilities and owner's equity. This is kind of a layout for a balance sheet. And the line in between is our equal sign. The assets have to equal the liabilities plus the owner's equity. If you have an asset account, and the easiest one and also my favorite is cash, and I always show them as a T account because that makes it much easier to track everything. As we discussed, we have debits on the left and we have credits on the right. Because cash is an asset account, it is increased with debits. So increased with debits. So I'm going to show increases with a plus, and I'm going to color code it as well to make it stand out. So it's going to increase with debits and decrease with credits. So it doesn't matter what type of asset account it could be. It might be inventory, equipment, prepaid rent. Always going to increase with debits and decrease with credits. There are some small exceptions to that, and one of them would be if it's a contra asset account, such as depreciation that's accumulated. So accumulated depreciation is an example of the reverse of that. So if we had a piece of equipment and just as before, equipment is an asset, so it's going to increase with debits and it's going to decrease with credits. As we use the equipment and as it ages, we depreciate it. And we'll talk about depreciation more in another video. But we have accumulated the accumulated depreciation. And this is still, we have debits on the left, we have credits on the right. But accumulated depreciation is actually going to increase with credits and decrease with debits. And that's because it's a contra asset account. In other words, it's going to reduce the value of your asset. As your asset ages and is used, your depreciation increases over time, and we'll talk about in more detail. It's going to increase over time, and that's actually going to offset the value of your equipment. Liabilities, on the other hand, examples are maybe accounts payable. This is money that is owed, and we still have debits on the left and credits on the right. But our accounts payable, our liabilities increase with credits and decreases with debits. So as your liabilities increase, as you owe more money, it's going to be credited and continuously being credited, and that raises the amount of your liabilities, and it will be decreased as you pay them off. You pay off those liabilities, it will be debited. Likewise, the reason I put owner's equity over on the right-hand side is because it's going to be treated the same way. Let's say we've got retained earnings. We always have debits on the left and credits on the right. But again, I've shown it on the right-hand side of the balance sheet, so we're going to treat it the same way. Retained earnings, as you add more retained earnings, you're going to be crediting your retained earnings account. If you are using retained earnings to pay off something or reducing retained earnings for whatever reason, you're going to be debiting it. We'll see this more in action in another video, but for right now, that is an overview of whether debits or credits increase or decrease your account values. I hope you found this helpful. Keep your grade alive and subscribe. And if you would be so kind as to strike the like button, and it helps with the YouTube algorithm. Thank you.